Meet Kevin is one of the most popular personal finance YouTubers with over 500 million views. He's been on the platform for a decade and started making videos on real estate, wedge deals, and eventually all things personal finance, stocks, crypto, and whatever he feels like. He also ran for governor of California and has recently gotten himself into hot water with the law, but more on that in a little bit. His newest venture brings together his domain expertise in real estate, investing, and salesmanship. He is one of the most controversial YouTubers in the personal finance space and also one of the wealthiest, reportedly earning over $20 million in 2021. He has a portfolio of courses, affiliates, and sponsors that make him one of the highest income channels on the entire YouTube platform. Meet Kevin just released his new startup, House Hack Inc. And in this video, I'm gonna explain what it is, how it works, the pros and cons of investing, and at the end of the video, I'll share whether or not I think it's a good investment opportunity. If you're new here, what's up? I'm Ferris, a serial tech entrepreneur, author, and I've also invested in 36 startups. I've also have my own tech startup, and I've raised multiple rounds of financing online. I also just published a book, How to Invest in Startups, a beginner's guide to angel investing, and I'm the founder of the Startup Investor Academy. This online program helps teach anyone how to invest in startups for as little as $100. So yeah, I know a thing or two about this category and I'm happy to share my perspective. So let's go ahead and get right into it, starting with the Meet Kevin startup. And let's go ahead and talk about what exactly that is. So directly from the 28-page investor deck, the memorandum, the private placement document, which I skimmed through all of these beautiful pieces of legal work, the company was formed to acquire, renovate, lease, manage, operate, leverage, and sell single-family residential rentals, SFRs, and multi-family rentals, MFRs. The company was established in June 2022. And let's go ahead and get right into the investment terms. This is probably the part that you're the most interested in, whether or not you're thinking about investing or you think it's a complete scam, or you're interested in just understanding how this stuff works. I think it's really, really compelling. So make sure you watch this video until the very end, and hopefully you can learn something from the process. So the valuation is being valued up to $200 million. Now, Meet Kevin originally put out a video talking about how it's a one-to-one valuation and cash investment, which means if they raise $30 million, the business will be valued at $30 million. And he also notes something around a assets to book valuation, which public companies are maybe at like a 2 to 3 multiple. So 1-to-1 is actually a 1/3 of that. So just something to keep in mind when it comes to the valuation, but the minimum investment is $25,000. Now that might sound like a lot of money, but actually for a private placement in a private company, that's pretty standard to have a minimum investment of $25,000. Some people think that's a scam, but that's actually pretty common how it works. There are some things in legislation that have changed in the last few years that allow you to invest for as little as $100 in a lot of private tech companies. That's actually how I've raised money for my own company. Investors in our community, we have over 600 investors, all the way from $100 all the way up to $200,000. So that has changed, and I'll mention that a little bit later with Regulation A, but the minimum investment is $25,000, and you have to be an accredited investor to make that investment. All that means is you make over $200,000 per year of the last 2 years. If you're single, if you're a couple, that means $300,000. Or you have liquid net worth over $1 million, not including your primary residence. I actually made a video specifically on that topic of what is an accredited investor, how to become one, all that good stuff. But if you aren't looking at dropping 25K, doesn't mean this video is useless, doesn't mean it's a scam. It just is the way that it's currently operating. This is a Regulation D offering, and there are warrants, and the warrant is basically just a pro rata right. All that means is if you invest before a certain time period, you are granted a right to invest again in the future. So that's actually pretty common. That's not anything weird. The way he's doing it is a little bit weird in the sense that if you invest before a certain timeline, you get a different percentage warrant or pro rata right. That is a little bit complicated. Normally it's a lot more simple than that, but it makes sense. He's trying to build his own incentive structure. I don't really think that's that big of a deal. Then there is also a closing date, March 31, 2023. And looking at the investor materials, it actually can be shortened or extended, which makes a lot of sense as well. It normally doesn't make sense to have a hard deadline and you can't adjust that. So that's also pretty common. Like I mentioned, it's a Regulation D offering. There's a lot of different types by the Security and Exchange Commission in how you can actually raise money for a business. In this case, Regulation D is actually pretty common. The way he's soliciting money online is not common. This is not investment advice. I am not your financial advisor, but apparently he is a financial advisor. I don't know if that means you can solicit funds online. Normally you can with a Regulation CF. That's how I raise money online. That's called Regulation crowdfunding. I also did a video about that topic, so if you're interested in raising money for your own business or investing for as little as $100, make sure you check that out. But that's a basic overview of the investment terms. Now I want to get into this investment opportunity. If you're trying to understand, why did he create this? Like, how does it work? Whether you're trying to invest or not, it just helps from a business perspective to understand what's going on. So the ultimate problem from my perspective that Meet Kevin is trying to solve with this company, House Hack, is that investment groups and individuals don't focus on single family units to buy that are below market value. So there are a lot of companies out there and real estate investment funds and groups that do go out and buy real estate. They're buying commercial, residential, whatever. But it seems like, and again, this isn't my industry, this is his domain, that a lot of these companies are just going out and just buying houses to acquire market share. And now they're just sitting on a lot of real estate assets. And I think Meet Kevin is trying to bring his approach of the wedge deal and just trying to find below market value rather than just buying things and trying to outbid the competition with all cash offers. So I believe that is one problem that's trying to be solved. The other is the increased mortgage rates that we've seen over the last year or so, or even 6 months, are hurting non-cash buyers. So what this means is the affordability of a home is not as good as it was 6 months ago at the time of creating this video. Therefore, if you are to try and buy a house and someone can come in and just buy a house cash, you're actually going to lose to that person because you can't even afford the house that you're trying to compete with, and they're just going to get the offer anyway. So it does kind of screw over the individual home buyer, to my knowledge, but that is a problem in the market, is this increasing mortgage rates. And even if they go down, they're still probably going to be elevated for at least the next few months and years. And that's an opportunity if you're an investor or you're in this space. So the solution and business model is to buy under market wedge deals using their AI finder. Now he really talks about how they're not a technology company, but they happen to have created something with this artificial intelligence. I have some strong thoughts about that towards the end as a tech entrepreneur who has raised money in this domain as well, but more on that later. And then the next part is to fix, rent, sell, and repeat. So you find the under market value homes, single family or multifamily rentals, and then basically fix them, put people in them, and then potentially sell them off in tranches in the future. And he talks about this in his video, but basically over a 5 to 8 year period, that's when you get the most increase in value, appreciation if you found a wedge deal, and then you go off and sell that to some other fund basically, and you use those proceeds to then reinvest back into the business. So that model actually makes a lot of sense. The interesting part will come down to him leading the charge, which we'll talk about in just a little bit. So that's a solution and business opportunity. He talks a lot about market size in his investor materials, but not really the way a market size is supposed to be talked about in investment materials. Normally in market size or market opportunity, you're talking about how big in dollars or in population the investment potential is. So for example, the swimming market in my domain, there are 26 million people who swim for fitness, and 10 million of them are a subset of that who have this particular action, and collectively they spend $10 billion every single year on swim training, right? That's just an example. So the real estate equivalent of that would be there are 40 million homes sold every single year in the United States. I'm making this up, it's probably not that many. And that total market is, $700 billion, and we are going to capture 20% of that. So that's $140 billion of total addressable market, right? That's not really what he does. He basically just talks about different companies that are in the category that are worth over $1 billion. He talks about Opendoor, Redfin, Appfolio, these other companies that are kind of doing the same thing, just to show that there are other companies out there that are doing this. I don't think anyone doubts the market size. It would have been nice in the investment materials. Like I'm not gonna go and do the research. He should have done that. And whatever, it is what it is. So moving on, competition. He compares his company, House Hack Inc., to syndications, REITs, and DIY, which is do it yourself. If you were to try and find the wedge deals yourself, his matrix is actually pretty interesting, and it is compelling if it's well executed. So he could argue that if you replace his name with House Hack, just like Meet Kevin can outperform syndications, REITs, and if you were to do it yourself, because he's done it many, many times. The problem is this is a company. So you really have to figure out how is a company gonna do at scale what he's been able to do individually. So that's really how you should be thinking about this, not necessarily is he going to outperform? Yes, I definitely believe he will outperform all of these, or you or me if we were to try and do this ourselves, because he's proven very successful at it. The problem is trying to form that into a company, into a business. And let's talk about the future, because this is really where the big opportunity is. And it is scaling through a software as a service, which is basically a subscription offering to their AI. Now, he also put a quote in here that they are not a cash burning tech startup, but really the core value of the business, in my opinion, is if they can create something novel and have this technology that is unique and has intellectual property around it. Otherwise, I believe they've already created some type of AI software, but it's probably not that complicated, and someone could create that in a very short period of time. This is an area that is very exciting. People want to get in on this, and having a few programmers work on something and take his mind and dump it into some AI is really not that impressive if it can't scale up. So that is a potential red flag for me, thinking through that this is a maybe we'll do a software as a service when this is the thing that can actually deliver the most value for the business. Because right now they're relying on House Hack Inc. when comparing to others, which is really just Meet Kevin and his tenacity and relentlessness, which is great as an individual, but as a business that's going to scale into something that could be a publicly traded company, you need more than that. You need infrastructure around that, and you need to be able to develop that over time. So not making an investment in technology early can actually hurt you in the long run, because you have really nothing to keep your business going outside of the brand name. And right now, the brand name, let's talk about that. The team, this is an important variable when considering investing in a startup. The team is basically Meet Kevin. He is a solo founder. Now, this guy does happen to be someone who is relentless. He seems extremely intelligent. He is very ambitious. There's a lot of positive things you could say that would make you feel this guy is going to execute. He's proven it before. He's also proven that he's done some sketchy things. So I don't want to go too into the weeds on this. It's great he has $150 million in real estate he sold. He sold 200 houses, flipped stuff. He has 2 million followers. He ran for the governor of California, right? This guy's got a resume of someone who's like 60 years old at the age of 30. However, he is a flip-flopper. He will work really hard on something and then change his mind. If you're running a company, that's a great asset and liability at the same time. It's good to be nimble, but if you're too scatterbrained, you're not going to be able to get anything done. Building a company takes time. It takes consistent. It's a grind. And you have to be able to put in the work for 5, 6, 7, 10 years and beyond. You can't just work on something for a year, get bored, or try and pivot hard. If you do that every single year, you're not going to make consistent progress. And he's proven that he's changed his mind on a lot of different things. We don't need to go in the weeds on that. He also has a sketchy record with the law. He was recently arrested just a few months ago. Whether or not it was a DUI, whatever, I think he got served with a DUI. But these are things that don't really help when it comes to integrity. And you want to have a leader that has integrity. And seeing the videos online of him being arrested and how he responded in that scenario, on the one side, it's sort of comical how that all played out. On the other side, it's concerning if that's the person that's going to lead the company, and that is the integrity that you're going to back. Some people don't care about that, and they're like, hey, whatever, I don't care as long as he's smart, executes, and makes me money. I don't really care. Other people value that a lot more. Let me know what you guys think down below in the comments, but also let me know what you think about the investment opportunity. I don't want the comment section of this video to turn into a spam of just hate and love for one individual. Instead, let's focus on the investment opportunity. Another thing to think about from a risk perspective that I already mentioned is that scalability does truly rely on other people. Yes, you can have a great leader, a great vision, and that visionary can lead the company down a path. Think about Steve Jobs, Elon Musk. But those people have proven their ability to recruit, hire the best people in the world to lead them, and those people are the ones actually running the company. Meet Kevin has not proven his ability to do that. I don't think he's scaled any team beyond his immediate helpers for his courses, for his video production when he ran for governor, and even building this AI software for this business. He hasn't proven that he can build a team. And if you're trying to invest in an entity, you have to make sure that the person can recruit a team, because that is one of the core jobs of an entrepreneur, of a CEO, especially if you're trying to build something massive, because it's not going to happen on his own. And if he pushes too hard as a solo founder, he's really just going to spin himself in circles. Someone will see, a competitor like one of these guys will see what he's doing and just continue to grow and expand into his market opportunity, and he's not really going to go anywhere. So that's an important consideration that I want you to think about if you want to invest in this business. Again, I'm not your financial advisor. Investment has risks. Do your own research. And while you're down there in the comments letting me know what you guys think, make sure you pick up my book, How to Invest in Startups. I also have a deal on my own program, How to Invest in Startups, through the Startup Investor Academy. Really excited about that. Hope you guys enjoy all the content in there. It's some of the best that you're gonna find anywhere, and I'm really happy to package it for you guys. So let me know what you guys think down below in the comments. Again, if you guys are new here, I talk about entrepreneurship, investing in startups, empowering you to take action on your dreams, and sharing my life traveling the world, building a global technology and media company. Hope you guys enjoyed the video. I'll catch you next time, and keep hustling.